Hey traders, welcome to Charts and Coffee. It is daylight saving shift, which I love because it's so nice and light late in the session. But now I'm getting the Charts and Coffee lighting in the morning, and sorry about that. It will be a thing for a little while. All right, great to see everybody. Hope everyone had a wonderful weekend. At least got away from the charts for a little while, and now it's time to get back to work, back to what's going on the charts, trade what we see, not what we think. There is an epic amount of really a lot of negativity out there. And, let's talk a little bit about time frames here, because if you're part of the Sector Secrets Mastery, you know that we made some really powerful watch lists that are using just sort of a psychology of, if this right now is what we're going to be dealing with in terms of volatility, where is the opportunity? And the first question is not always the symbol, right? The first question isn't even always directional. Sometimes the first question, if you're struggling in this environment, is to ask, let me move my mic here so it sounds a little bit better. There we go. The first question to ask is the time frame that I'm looking at, the time horizon that I'm looking to take advantage of, is it allowing me to handle the volatility? And that's where, in terms of, if you think about day trading, right? And what's the volatility being caused by right now? Is it scheduled events? Is it non-farm? Is it FOMC speak? Or is it unscheduled sound bites regarding either politics, geopolitics, or something along those lines? And I think we know it's the latter, right? That's very difficult to trade because it's very difficult to time when those things are going to hit. And are those hits going to be something bullish, where it's a kind of sigh of relief rally? What's a sigh of relief rally? Well, Powell gave us one, right? With his comments on Friday. Anytime there is some sort of delay or exemption of the tariffs, there's a relief rally. Call it a short squeeze, call it whatever you want. I'm less interested in what we name it and more interested in, hey, there are sudden shifts to the upside in terms of momentum on news like this, which is neither scheduled nor necessarily foreseen, right? So those are all things to keep in mind. Now, what's the best way to handle those types of events? A longer time frame. So the first thing would be, instead of day trading as much, instead of even short-term swing trading as much, how do we handle sort of the off-road terrain of the current equity markets and even the indices? Think about, well, you need a suspension with a little bit more travel. You need to be able to handle the occasional pothole and the big boulder. And I always think of those trucks that have the huge suspension and the independent suspension so they can drive over anything, kind of like a rock crawler. Yeah, that's the way we have to think. So for us, for traders, that is a longer term time frame. So all of a sudden, daily and weekly opportunities get really interesting. What looks like absolute panic right now could really be a great buying opportunity if we can qualify the criteria that would be, right? So Amazon right now is in a downtrend on the daily. And if I were to look at Amazon on the daily, this is one of the Mag 7. Is this a problem for the long term? Well, I'm not going to answer that by looking at the daily. What we do in the mastery is once a month, we get together, and this is something that we do uniquely in the Sector Secrets Mastery. And we say, hey, once a month, let's take a step back. Let's take a look at position trades. And maybe that's a term some folks haven't heard before, a position trade, because I'm not here to talk about investing. I'm a trader. Even when I look at long-term buy and hold, I don't think like an investor. I think like a trader. There's a timing, there's a strategy, there's an entry, there's an exit. So even then, I think like a trader. And I think a lot of investors would behoove themselves to think sometimes a little bit more like traders. And frankly, sometimes traders might benefit from a little bit of a longer term mindset that an investor has. So when I think about position trading, what I'm thinking about are what symbols could have the ability to, let's call it buy and hold, but not a blind forever and ever buy and hold, but a longer term time horizon, meaning how long I could be in the trade, using a longer term time frame, which is the interval of the chart. This is a weekly chart of Amazon. This is not as bearish. Right? When I look at the overall structure of Amazon, oh, come on, puppy. It's okay. I got the pup in the office today, and I think the pool guy might be here. All right, so when we take a look at dips in Amazon for the past handful of years, especially in the uptrend since 2023, yeah, there might be a really cool opportunity if we look at this from the lens of a longer term. And that's where, again, panic doesn't come from volatility, and panic doesn't come from downtrends. Panic comes from not having any kind of plan for that behavior. So that's what we focus on a lot in the mastery. What is the plan for that longer term time frame due to what we're dealing with right now? And there are plenty of opportunities. Now, it's not to say we're not actively trading. We rolled out of 4 of our 6 swing trades the early part of last week. And then now we still have 2 open trades that are in this kind of quirky defensive area. I say quirky because most of the time, if you're looking at defensives, XLP, XLRE, XLU, number one, please don't presume that just because the broader averages are down that these defensives are going to go up. It's not a knee-jerk reaction like that. In fact, XLU has not been on my list. We've been focusing on XLP and things like Coke. But XLV, which is not, in my opinion, of what a defensive has to be. Ideally, a defensive is not heavily weighted in the Dow, NASDAQ, S&P. So those can do whatever they're going to do, but this defensive, because of the stocks that are within it, aren't that sensitive to what's going on in these major broader averages. XLV is not that because it's weighted heavily in the S&P. It's heavily weighted in the Dow. So yes, it has been, as you can see, bucking the trend overall of those broader averages, but it's got to work so much harder to do so. So right now, if you take a look at some of the leading sectors to the upside, and yes, gang, there are bullish wins to be had. The last 10 days, 6 swing trades, all 6 A are winners, and B, they're all long calls. So yes, there are places to start looking long puts, and that might be wrong. Are you ever going to get bearish? Yes. Let's take a look. As of last week, 1, 2, 3, 4, 5, on the 3rd of March, which was just 7 days ago, last Monday, we got the 5th red candle on the top tier system. Now, the top tier system's job is to not only just look at open, high, low, close, right? Now, what does that mean, Rog? If you're using moving averages, simple, exponential, that's just open, high, low, close, calculated in a different way. If you're using stochastics, if you're using trend lines, if you're using support and resistance lines, that's just moving. That's just open, high, low, close. That's just price. And that's great. Price is super important. It's the foundation for everything. But then if you think about, there are 3 more factors that affect price movement. Time, right? The calendar, time of day. These are things that tend to bring in and take out certain types of attention. We know that the end of a quarter is very volatile. Why? Because we know the end of the quarter tends to bring more of a rebalancing type attention. We know that the end of a week can be a little bit different in terms of sentiment than the beginning of the week. We know that the end of the day can again have a different sentiment than the beginning of the day. We know there are volatility periods around options expiration Friday. We know that pit bull lows the week before can have a certain amount of psychology around them. So those are all things that I keep in mind. So that's time or calendar date, right? So price and time. If you're just doing those 2 things, you're probably head and shoulders above most traders who are just looking at price. But what if you add then volume? We spent a lot of time last week talking about volume. Volume is the only, gang, let me make this super clear because there's so much nonsense out there about, oh my gosh, dark pools. They've been around. Maybe they go somewhere. Maybe they're here to stay. But price-based volume works. Why? Then why does anyone use an anchored VWAP, right? Why does anyone care about a point of control? If everything is happening in a dark pool, which is what some folks want to convince your retail traders of, yeah, there's activity there. But at the end of the day, there's still a lot to be able to take away from price-based volume on a chart. So I take a look at it. Where is the anchored VWAP for the year? Where is the point of control for the year? Where's the point of control for the month? Things like that. Even down to where's the point of control for the day? And we can do that with price-based volume. Now, there's always this sort of overriding, question and maybe even obsession about what's the big money doing? Big money is just really a group of dollars. Who has the dollars? Retail traders have been more influential than ever before. Retail traders are a large group of dollars. Hedge funds are, of course. Algorithms can come in and out. We know that institutions can do that. But the one thing all of those groups have in common is where they go, there's going to then be volume. So the best way to understand where the big fill in the blank, right? Big institutions, big money, where's the big retail attention? Look at volume. That's the only way to do it, right? You can't do it with price alone. Price alone has its job, but finding where the big money is not the job of price. We go to another layer of understanding, and that's volume. And I did a lot on that yesterday. And the last one, probably the most elusive and frankly most difficult and maybe difficult to calculate and maybe the least used by far is volatility, historical volatility. So I've got price, I've got market structure, I've got volume. I always want to know, where are we within the calendar? And I've got volatility. If you can focus on all four of those factors, you're in really good shape. And so the reason I'm kind of getting back to this sort of remedial, let's start at the beginning, let's begin at the beginning type psychology is because a lot of times when people panic in this kind of environment, A, they're letting in too much noise, and B, they don't have an answer for, well, where can I be bullish? Where do I need to start being bearish? And that's where last week, and if this is something you're struggling with, I sent out, and my mastery folks will know, we sent out 2 links. The first link was a list of swing trading names, bullish and bearish. The next is a list of sectors to look at and also the process around that longer term. And if there was ever a time, as we're wrapping up the third quarter and going into Q2, second quarter of the year, so we go into the third quarter, second to third quarter, this is going to be a very interesting time as we go into Q2 and then eventually into Q3. Between those 2 quarters, we're expecting to see rate cuts again, right? Rate cuts are not off the table. In fact, with non-farm payroll and Jerome last week, we started to see not just a 2 rate cut scenario, but a 3, and even I think it's a bit of a pipe dream 4 rate cut scenario. The Federal Reserve is not done. And the only macro that matters, believe it or not, gang, is the Federal Reserve and the monetary policy. One of the things that we've been talking about also in the mastery, for those of you that want a little historical context, because it gives you, again, some assuredness that, hey, guess what? Newsflash, the world's not going to end, right? And even if it is, why are we positioning our portfolio for it? That's what always cracks me up with all these doomsday naysayers. If the world's going to end and it's just futile, why do I care what stock I have, right? That just kind of goes to show it's an attention ploy. It's a, hey, look at me. I'm telling you that, it's the boy who cried wolf. Can we start calling these analysts the boy who cried wolf? And even worse than that, oftentimes they're so bearish all the time, we're going to have opportunity costs by listening to these knuckleheads. Are there some things that are bearish right now? Yes, there are some downtrends. Great, we'll buy puts, right? We'll use them as trading opportunities and we can buy puts. One of the ones that's been pretty popular in the mastery, I know the bot put this trade on, long Tesla puts. Why on earth would I buy calls in a downtrend? And this downtrend has been in place since February 12th, right? So yes, there are long call opportunities, but even more so when I look at the list that we put together in the mastery, our watch list from last week, it's far more. It's probably 3-to-1, 4-to-1, 4 being long puts, maybe 1 being long calls. So yeah, it's definitely 3-to-1, 4-to-1 puts to calls in terms of the watch list, where we are in terms of bearishness. But again, being able to buy puts, we're traders, right? This is an opportunity. So just be careful because the natural drift of market behavior is to the upside. That's the natural drift. Yes, we'll have periods of time where things are weak. We'll get bearish. We'll go long puts, but for the most part, it is to the upside. Now, that's not to say we may not have a prolonged period of movement lower. That's entirely possible, but we have to have a watch list that shows us what those names are. All right. So we do have some data this week. We have JOLTS data tomorrow. We have non-farm payroll data Friday. JOLTS is the job opening. And I would consider JOLTS the second most important hot zone in terms of the second mandate of the Federal Reserve, which is employment. And then we have PPI on Thursday, which could be a surprise to the upside because a lot of what happened last time. So I was kind of talking about how we can look back at history. Look back at Grexit and Brexit. I've been talking to the Mastery folks in the room for weeks about, hey, we have had something similar in terms of unpredictable volatility. And that was the Grexit, Grexit, and Brexit. And those were probably as similar to, these unforeseen volatility bursts and so forth that we've seen in a while. Again, focus on those four factors: price, time, volume, volatility. And if you don't have a process or even the indicators for it, come check out what we're doing in the Sector Sequence Mastery. And the other thing I was going to mention in terms of just maybe some historical context aside from Brexit and Grexit is just from 2016, right? Let history be a really good guide. And this is where something like TradingView, I love it, you can go back into replay mode. So if there's anything I could encourage anyone to do here is go back into replay mode. Ask TradingView, hey, let's go back, let's go way back to 2016. Let's play it candle by candle. Let's take a look at the kind of movement that we saw and ultimately what ended up happening. And those are things that anyone can do on something like TradingView. And that's an instant education. It's the next best thing to a time machine. It's the next best thing to having actually traded through it. Or even better, let's say you did trade through it, but not successfully. You can take the things that you know now, take the indicators that you have now, take the process that you have now, and then just go apply it to what we saw back in 2016, right? And that's where technology like the replay mode of TradingView is so powerful because you can go back and actually sort of relive it. But now with the frameworks, whether that's trend following, whether that's understanding overbought, oversold, that you have now, right? Maybe you weren't as good a trader back in 2016 as you are now. Maybe you didn't have the tools. So go back then with what you know now, and then say, okay, the market's done things like this before. It's been a little difficult and volatile and bearish before. How did the story end? And while it was happening, where were the opportunities? And go take a look at the staples. Go take a look at the Mag 7s. Take a look at financials and healthcare and industrials and get a feel for what they did. And then you can say, you know what? I've got a kind of game plan. It's not the first time we've seen uncertainty and weakness before. Now I've got a game plan. I've seen it now, right? I have some visual cues that I could use. And those are things that I recommend to traders as we're dealing with this time. Lengthen the time frame. We'll be talking a lot more about this in coming weeks. Think about swing trades. Think about position trades. And we'll see what happens next. We'll just trade what we see, not what we think. Keep an eye on opportunity. Don't get pessimistic. Gang, I've never met a rich pessimist. So let's stick with the optimism of there's an opportunity somewhere. All right, gang, be good to each other. I'll talk with you soon.